coming. Today's hearing will examine the overall climate of credit in rural America, the health of ag lending from both the commercial bank and the farm credit system perspectives, and what the impact the current credit environment is having on our nation's farmers. We will also examine whether the Farm Credit Administration is exercising appropriate oversight of the farm credit system. Farmers and ranchers all across the country are experiencing difficult economic conditions as the farm sector profitability is forecast to decline for the third straight year. Over the past 3 years alone, net farm income is expected to decline by 56%. As our nation's farmers and rural communities continue to deal with low commodity prices and always elevated input costs, access to affordable credit in rural America is absolutely crucial. The spring 2016 Agriculture Lenders Survey, released by Kansas State University's Department of Agriculture Economics, expects the credit environment for farmers to remain difficult for at least a few more years. Lenders indicate that demand for operating loans will continue to remain high as liquidity cash flow are problematic for many farmers. Further, non-performing loans have increased and are expected to continue in this unfortunate trajectory due to low commodity prices. In addition to the lender survey, the Federal Reserve Bank of Kansas City painted a similarly bleak projection of the farm sector credit conditions for the first quarter of 2016. Lenders note an increasing share of farmers carrying over outstanding debt from previous years, with an increased demand for loans and weakening repayment rates. Now, for farmers, every year is a high-stakes bet as they put their confidence in their crops, livestock, and the business decisions they make all throughout the year. While farmers continue to manage their risk through a period of low commodity prices and stubbornly high input prices, it is vitally important we begin discussions regarding next year's borrowing decisions. There's no doubt that today's discussions is timely, especially considering it has been just under a decade, 10 years, since we have had representatives from either the banking industry or the farm credit system before this committee to discuss some of the issues we will cover today. Rural America relies on a network of credit providers consisting of the private sector and the farm credit system. Created under the Federal Farm Loan Act of 1916, the farm credit system is a nationwide system of privately owned cooperative lenders statutorily required to provide farmers and other rural borrowers with a permanent and affordable source of credit. Currently, the farm credit system is comprised of 74 agricultural credit associations and 4 regional banks, which provide the ag credit associations with funds to make loans to producers and other retail borrowers. The agency tasked with regulating the farm credit system is the Farm Credit System Administration, or the FCA. The Farm Credit Administration is an independent agency comprised of a three-member board nominated by the President and, as we all know on this committee, confirmed by the Senate through our committee. Like the banking industry, the farm credit system is not a lender of last resort. The lender of last resort for farmers who are otherwise unable to secure private financing is the Department of Agriculture's Farm Service Agency. Our commercial banks and the Farm Credit System, Service often relies on USDA farm loan guarantees to make loans when borrowers are less credit worthy. Now, to date, the Farm Service Agency has seen a 21% increase in farm loans as compared to last year, a further troubling indication of a struggling agricultural economy. Obviously, much has changed since Congress established the farm credit system 100 years ago. One thing that has not changed, however, is the importance of providing farmers and other rural borrowers with easily accessible and affordable credit. Now, I, along with a few members of my colleagues on the Ag Committee here, remember very well the difficult times for the farm economy during the 1980s. No one wants to see a repeat of those dark days. So I look forward to hearing from our two distinct panels of witnesses regarding the landscape of the current economic conditions in farm country, what is working or needs improvement from a legislative perspective to protect the financial well-being of our farmers and our rural communities. Now, before we hear from our witnesses, I recognize our distinguished ranking